Hey everybody, welcome back. Good to have you here for Markets and Sectors. My name is Mike Fairborn. Really love talking in this class. I really enjoy the discussions that we have. Well, folks, we do oftentimes look at market conditions. This is what we do in this class. Market conditions, we break that down into, hey, where is the sector strength or weakness coming in at? And then we like to focus in on individual stocks to give us just a better indication of, hey, what's working maybe, or what may be setting up using macro themes also tied into a top-down analysis using those chart trends. So that's what we try to do within this class. So we'll get into it here in just a moment. Would like to take the time, though, just to welcome you all in today. Hello to you, Vic, as well as Kelly, Sean. We've got David, Will, Dragon Rider, and Beth. Good afternoon to all of you. Love to see the comments coming in. I apologize if I missed anybody at the very top of our screen, but welcome to you as well. We are here with Mr. Cameron May, who does a number of chats for me. I do chats for Cam as well. In fact, I'm filling in for Cam's class on Friday, Advanced Technical Indicators, and so I'll try to do a nice thorough job, just the way that Cam does each and every week. But with that, hey, let's talk about some of the discussions that have come up in the market from last week. You know, there was a lot of discussions on the Fed. I want to hit some key points that have come up more recently and see how some of those sectors are performing. So with that, let's dive into this right now so we can get going here with some disclosures. So information is provided for the information we'll be discussing is provided here for general information purposes only. Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application for education purposes only. Vesting does involve risk, including for some products more than your initial investment. Now, you can see below we've got some disclosures on futures. Futures and futures options trading does involve substantial risk, not suitable for all investors. And folks, lastly, past performance is no guarantee of future results or success. Turning to our charts here and looking at the market broadly speaking, I ran into a grid that I had been using previously, and I looked at it quite a bit. It's been a little bit hidden on my grids, and I don't know if you guys use these grids the way I do over here, but I do use a lot of just the grid charts. And this is really a great grid. I'll share it with you too. I mean, it's an easy one to kind of replicate, but it's just four market indices is all it is. It just looks at the indices, the S&P, the NASDAQ, the Dow, and the RUT. Folks, it just looks at that nice standard 3-month time frame, one that I think we can all appreciate, right? It's just a quarterly time frame. And what I like about it is it does give a little bit of a trend. So we see a trend there, but it also gives us a sense of, hey, how does the trend look relative to the support and resistance on the chart? It's really great because it gives it to us all in one shot, and we don't have to go through and look at the S&P and the NASDAQ. We just have it all in one, and I can sit here and draw lines and just say, well, what's showing strength as of late? Okay, you can see if I wanted to say strength, well, one way to do that is to look at some of the prior highs that we've had out there in the market. If we go back just a little ways, we just say, well, what about these highs? How are we doing relative to prior highs? Well, you can see the Dow is outperforming. And now what's the Dow referred to as? What's the Dow Jones I? That's the industrials. Tariffs have been impacting some of those companies that have been, manufacturers in the U.S. actually quite well. We saw a sharp breakout here, and we've been actually holding in that range. Now, all else equal, traders would say that's a positive relative to maybe the S&P, which is actually not too far behind, but a little bit behind. Clearly better than the NDX. We'll hit that in just a second. But the small caps, those interest rate sensitive small companies that might be more impacted by interest rates, actually, relatively speaking, than others, and maybe a little bit more dovish tone from the Fed coming from the Jackson Hole Symposium last week. Think about this for just a moment. You've got the RUT. Well, it's kind of breaking out of a long-term consolidation that it's been in, and that would extend back even further in time, as you know. And look at this. That's a higher high break. Let's just do it. Let's just highlight it. It broke above that high range. It didn't quite rest on prior highs. Of course, there was a lower high, a higher low and a higher high. And this is really the strongest performer of the group. As a matter of fact, it was breaking a new high right over here about mid-August or so. So keep that in mind. These are fascinating. I sent out an X post on this. Now, before we dive in any further, what is the NDX showing and why is this relevant? Well, the NDX is really powered by technology. But what's tied into that too, and what I would also state, if I could write this out, the Mag 7 specifically, we know heavily weighted within these indices, the S&P 500 specifically. You got some big weightings there, and I would say that it's been holding us down a little bit. Look at that. So we're down, obviously, the weakest performer of the group. Now, traditionally, it's fascinating because interest rates do tend to be impactful towards growth stocks, right? Borrowing costs are better, and what tends to happen is growth becomes more prevalent. You can see more borrowing and there can be more growth within certain stocks. And technology companies always like that higher ROIC, return on invested capital, and that can come with new projects. And if they're borrowing funds to do that, well, that's kind of the long story short with interest rates. But they can be quite strong. Now, what I like to do too is just jump back over here. Well, I can do this actually too. Over here, I do have these mags set up right there. You can set up, oh, let's do it this way. I've got them really cool on the platform. I'm sure you guys have done this, but just add them all up. There is an ETF for it as well. We don't go into that in this class, but if you just do them all together, and I've got 7 there, that's a view of the Mag 7. You'll notice that dip right there in the Mag 7 has shown me some weakness, and maybe similar to what have we been talking about each and every week? That seasonality. Seasonality plays a role sometimes, and oftentimes, when you see markets look like this, you kind of see that seasonality coming in a little bit. In August, right? We've looked at the seasonal perspective. I'll pull that up in just a moment here, but could certainly be impacting a group like this. Now, there is something interesting I wanted to highlight because it does impact the S&P 500 index, folks, as well. The Mag 7, it's a big part of it. If you've seen this before, there's a view of the S&P 500 on our heat maps. These blocks really just indicate over here, how weighted these are within the index. Broadcom is not in that group, but it could kind of, it is tech and it can kind of fit in. Google has a huge block. It's got a couple of different symbols in there, different class shares, and you've got Amazon, you've got Tesla over here as well. But you can just take a look at this. This is a big portion. If I can just highlight even some of these ranges, let me look at it. Of the S&P 500, you got so many of these other little ones, but it plays a substantial role. Now, folks, getting into the breadth discussion, I was looking at an indicator today that's actually going to be quite helpful in what we do. Before we dive in to some of the sectors, I want to look at this big picture, and you could use something like this. I thought it was really quite cool. You've seen this symbol before as we look at the S&P 500 on an equal weight. That's SPXEW. Now, when you see the equal weights going higher, outperforming, and kind of in a sense, it looks like the Dow or the Russell that we'd seen, it's showing more strength. In fact, we cleared this long-term hurdle over here, which was some resistance as well, just equal weighting everything in the S&P. So it really puts the Mag 7 to an equal footing as all of the other S&P 500 companies on a performance basis. Now, it's kind of fascinating because really to get the S&P 500 going higher, in a lot of cases, you might say, gosh, you need the weighted portion of the index going higher. We know that if the S&P goes higher, it can have an impact on sectors and individual companies, right? So with that, why don't we use a tool to help get us a sense of when the Mag 7 might be turning to make things a little bit more sensitive so we can see it a little bit quicker. We can do that with a price ratio. Let me show you how that could work. So here it is. So we'll type in an indicator price ratio right there. We click on the price ratio. And in fact, let's just read through that ratio right now. I don't want to go through this stuff too quick. I want you guys to really get this concept down. Okay, it's not going to, yeah, sometimes it loads for me on this demo account. There it is. So the price ratio study demonstrates the relationship between prices of 2 specific symbols. This relationship is expressed as the ratio of the first symbol's price to the price of the second symbol. So we're just making a comparison. And what I want to really look at here is how is the SPXEW performing relative to some of these others here. I'm going to wipe out what just some of these defaults are real quick. Those are just defaults within the system. But what I'm going to do is just go SPX right there. I'm going to tab through, and I just want to look at the SPX. I'm just going to compare the equal weight to the SPX here. And I'm going to throw this guy in right now. In fact, I'm going to go red, and what we'll do is we'll widen this out a little bit just to see it a little bit better. Okay, price ratio, SPX, close. Okay, it is not popping up. If needs be, I'll do a comparative ratio on this here. But price ratio, close. Let's see, S&P. I want to just try one other thing here and just see what we've got. Comparison. I might need to put the EW on the second one is what we need to do. Yeah, I was thinking, and I must have made this adjustment previously, but sometimes you don't have to put it on the second one. We'll go ahead and do that right now. EW. Keep going. EX. It's EW. Double check that before you go to tab through it. EW right there. Hit enter and sort of just tab through. There we go. Okay. There we have it. So we've got a price ratio here, a performance, and we do have some other indicators. Let me just make a quick adjustment. Let's make this full screen here in just a moment, but I don't really necessarily need a fast and a slow moving average on here at all. I'm not looking for that one bit. I'm just looking at straight up here, tab through how these two lines perform. And so what we're seeing here, okay, is a downward move. And what this means is the SPX EW outperforming the SPX. And we're looking at it on a relative basis here. This is really quite fascinating because what we can do now is we can just draw a trend line along here and try to pick up on maybe the sensitivity of this change. And what we're really looking at, folks, is in fact, we didn't quite break it yet. This would be an indication, potential indication, right, of the Mag 7. Hang on a sec. Magnificent 7 for short, breaking higher. And when this begins to break higher, that means that the SPX is starting to now show more strength, just say greater than the equal weight, the EW. Okay? It's a sensitivity indicator, and we're using some trend lines to help us with this. Now, there was a moving average in there that we could plot against there. That could be useful too. I like the trend line here because we've got a downward trend. And actually what this is showing us is that this is the equal weight right here when the mags started to outperform the S&P when they started to underperform the equal weights right there. And where was that? Basically the first week in August. This is a seasonal time frame. We'll see if interest rates influence this. Remember that there's interest rate cut expectations. At least the screenshot that I took, it can change, but the CME Fed watch list was a 90% plus potential expectation for a rate cut in the month of September. Getting that started, that could be interesting, and that could get us breaking above here, and we could see a performance in some of those tech groups. So just keeping an eye on that. Technology could be quite fascinating to kind of take a look at. All right. Hey, there is a survey in the chat. I want to hit this early because last time I didn't see that. I'm glad Cam caught it. Appreciate Cam catching that, folks. If you're finding this session useful or helpful, would appreciate it. It's just a 2-question survey, I believe, that you can put notes in there as well. I'd love to see that. But I take a look at those, each one of those. My manager does as well. If you get a chance, you've got to click on that link before time. Okay. All right. Well, let's do this. I wanted to break it down a little bit further into some of the sectors. This has been sector performance over a 6-month time frame. This main big picture grid is interesting. I just like to highlight just some of the key details maybe that may have come up. Of course, we did have that break. This is defensive, and defensive companies don't necessarily do great under potential interest rate cuts. It tends to be more of the growth. And so actually we're looking at more maybe some of the short term out there, like say, for example, let's see if I can just, look at some of these lines. Discretionaries could be strong. Energy, materials, some of the industrials, but you know what else has been actually quite strong is the financials too. Have been breaking above a range right here. These are all somewhat interest rate sensitive. And I want to zoom in on this that I built for you guys today, right now. So this is just built specifically for you. I'm going to back out of this so you can see it, but this is all of the S&P 500 sectors. I think it's interesting to do rotations where the rotation might be based on strength when we are looking at the possibility of interest rate cuts, right? This time frame up here, I've zoomed in a little bit. These are all 3-month time frames. Everything else is 6 months. You can see over here, over the last 1 month, really, less than a month, this time frame encompasses, there's energy. See the little bounce? This is a 6-month actually, but these have really been the best performers just ahead of and right after the Fed symposium on kind of the Fed's dovish stance on cutting interest rates. Now think how long we've been waiting for that change. It's been several months, and these have been the performers. Materials, okay? Look at how well that's been performing relative to the S&P 500. Remember, these will only go up if they've been outpacing the S&P 500 and financials. I think this is invaluable information because it is acting too historically like how some of these sectors have responded in an interest rate cut environment. Materials, think about heavy costs, very heavily capitalized materials. Think about gold miners, all that equipment. They if there's cheaper interest rates, they can borrow and grow and buy more machinery to process gold or whatever the materials are. I would also say that a lot of builders out there in materials, material builders would do better, like home builders, for example. They would get an impact of lower interest rates just on, more buyers and potentially more buyers within homes too, if interest rates are to decline. Just think about that. I mean, that's what's interesting because we do have like a home builder in there too that had really been doing quite strong. It's actually a discretionary group. Financials as well, quite strong, and they tend to do better sometimes when interest rates on the short term are down, but the longer term interest rates might stay higher longer. They can sometimes make more money on the longer end of the curve, for example, relative to the shorter end of the curve. We're seeing that spike, and this has been downtrending, relatively speaking, to the S&P 500 for a while. So every one of these actually has broken, let's just call it what it is. It's a potential sector rotation indicator. Gosh, that was not a straight line, but it did break the trend line regardless. And this one too, it's just barely breaking it. This one as well, discretionary. So we've started to come up from these downward sloping underperformance relative to the market. These could be interesting areas to really focus in on. Now, I wanted to highlight discretionary here. By the way, look at tech. So we would see this too on this chart if it were to spike. Let me share this with you guys. And I always put these, it's not really a think script at all, but I always put these in the description section down below so you can get, I've updated this one a little bit with the titles. I've made these top 3 on top. Actually, energy's been doing okay too, but these are 3-month time frames. The rest are 6-month. You can always adjust those, but I'll just share it right now in case you do want it, an updated version, or you don't have it. But boy, it is a good way, Riceberg. Yes, it's a good way to see it. And this is, we use this as kind of an approach for a sector rotation. The interesting thing, like I said, it's based upon what oftentimes the sectors you see when there is an interest rate cut as well, or cuts. Materials, financials, discretionary. Tech is one too that tends to be strong. Industrials as well. There's a little bit of spike industrials, but we shall see. Staples down. It's a defensive. Healthcare too might actually end up. You see, it's just started to come down as well. Interesting. We didn't know that would happen with the Fed, but there it is. The utilities. Some of those have dipped as well, relatively speaking. So there you have it. Okay, so you've got it. Again, I'll put that in the description section if you've got it. And there you go. Yeah, this is just mainly, thank you, Cam, for posting that. But this is just mainly, uh, it's just charts. These are just charts. So as long as the data coming in is good for these symbols, we're just looking at those sectors in the S&P 500. Now, one thing I did do, just to kind of give you guys sort of a view of those discretionaries, I just zoomed in here and pulled up some of those performers. We've been talking about these. You guys remember last week we looked at Wynn as a potential flag pattern. We did put a trade on CCL, right? Which is Carnival Cruise Lines, because we did talk about discretionaries last week as well. We didn't look at the sector grid the same way, but here are some others. LVS quite strong, BWA as well. You've got, these are kind of top movers, maybe some of the leaders. We've got some on the bottom down here, some of the bottoms perhaps. Right? And you've got Lowe's. Think what we just talked about. This is discretionary only. But what did we just mention about interest rates? If people can borrow, if they can take out home loans that are cheaper, whatever the case is, well, could that benefit like a home improvement site? Absolutely. Not just home improvement, but what about builders? I mean, there's a lot of professionals that go into a Lowe's or into a Home Depot, right? They've got their own sort of group of professionals. Lennar, this is straight up. There you go. That is a home builder. Macro theme, interest rate cuts. Could these be like a sort of a, well, let me just change some colors up here. We've seen some of these that might be a cup and handle. This one could be as well. Lennar, I mean, these have been down for a while. This is just 1 year. And that was down almost what about $90, I guess, from highs to lows. But could there be something stronger behind these moves? I want to try to clue you in on this in this class, you guys, so you can keep tabs on these. But I'll pull up the scan so we can go through that as well. Here's another interesting one too. This is Best Buy. Best Buy over here. You can see this a little bit of a, well, what am I doing? I'll just zoom in. That makes it a little bit easier. In fact, we'll start with this one here. Maximize the sell. But there you go. It's a little bit of a rounded bottom on lows and a potential curve. Kind of a little bit, this is really, really short term. If you can see it, that's almost like a triangle pattern, really, really short term. You'll see it if I go like this. 30-day, 30-minute. You see it? Higher lows and lower highs. There you go. Right, triangle pattern. Let's go into this one. Lennar Home Builder. Interesting. We've had mortgage rates so high for so long now, relatively speaking. It could be a real reprieve for a lot of the builders and hopefully some of the younger home buyers out there too. Here's Best Buy though, and that is a bit of a, if I did I'm really having a hard time on the single hand drawing these down. That's kind of a trend line right there. But you can see we took out that level and kind of broke above that high. Could be interesting. Clearly a discretionary. If people do have more money, lower interest rates in general, they can afford to borrow, or excuse me, to purchase, but they might take out a loan to do so. Whatever the case is, it can cause more growth. That just happens to be discretionary. This is one that's really at the bottom, though. These others have really performed quite better. If people have more money, a lot of times they will go out and gamble that. All right. In some of these, casino. What I wanted to do too, while we're at it, is just look at Home Depot. Might as well. We looked at Lowe's. What's going on in that group? Thinking about home builders there. There you go. Okay, a little bit longer term on Home Depot. What do we have? Okay, maybe resuming. I mean, you got to say that's a long-term trend to the upside. And this is really interesting. You guys see this? You probably see it on the monthly chart. That could be a giant cup and handle right there. Weekly cup and handle, and we're just getting moving. Could be powered by something like interest rate cuts, right? Could influence that. So just park that in the back of your mind. There is that monthly chart right there. A little bit easier to see on a monthly. We don't know what we'd see on that, but there you go. Last one, along with Lennar. Here is DRI. No. What is it? It's not DRI. That's the restaurant, Darden. DHI. DHI would be DR Horton, which is another home builder. Look at that. Now, I'm just stating it's a longer term sort of cup and handle possible recovery here. How long has that trend been going down for? Quite a while. That's a big dip. But maybe could it fuel a rally and extend higher? You notice over here when we did have this sort of cup and handle after a big extension, it has some of these little handles over here, followed by weekly moves that are quite big. So this could be quite interesting to kind of take a look at. In fact, what some traders might do is maybe take a level right down here where there was major support. You got this high here and high, not maybe major, but some indications of support. If it were to flag over here around 150, a lot of potential. It's a big round number. Prior highs. I'm just going to right click, create an alert right there, at or below. Okay, and I'll just say something like this, so that when it texts me, I'll just say flag, and I'll go like this, hit enter, and I can get texted that message or emailed that message. All right, let's look at some materials too, Riceberg. I like your idea there. We can kind of take a look into that. Yeah, and maybe, yeah, some materials for sure being cheaper. It's funny though, this is linked in the discretionary field, but I'm with you on that. It's kind of I was thinking more materials myself. You guys, if you guys like these discussions where we do look at macro themes, major changes, top-down analysis using sectors, give us a like. Hit the like button if you do find it helpful and informative. I think having some of these major macro drivers can be really quite helpful to a longer term trend. But that's my take on that. Let's go over here and take a look at the scan. And this is all we did. Yeah, so we're just back in our stock hacker, making some basic reviews of the stocks that are in there. S&P 500, folks, I just went right into discretionary. Those are our performers, and you might recognize some of those. I just had them posted right there. There's Lennar. Oh my gosh, yeah. So this is fascinating. Look at this. So auto, home building. People take more vacation. Sure, that's discretionary. But I'm thinking too, like some of these you'd think would be more into the materials sector, home building for sure. But there you go. That's how it's lumped in here. But you've also got casinos and others. This 1 month % change is really, really helpful. I'll share that too. This is a think script, and just as Cam had posted with that post in the chat, that these are not guaranteed for timeliness or accuracy. But I just wanted to highlight that but as long as the data coming to the platform is correct, then it should accurately be posted. It just needs to follow, mathematically what that script says. But here it is, in case you want it. 1 month, and it is colored, which I do love. So you can kind of get a difference, performers versus underperformers. I've got it in red if it was an underperformer relative to the market, colored script. There you have it. Okay. So that's in place. Let's do this. Let's make a quick switch over here because I do want to see what's in materials and what's been moving. Let's go down to industries and look at those materials. I'm going to select everything there and see how many we've got in our group. We've got 27 now. Albemarle. Albemarle is a specialty chemical company. It, I believe, is the best performer in the group. And by the way, if I look at this long term, it has not been the best performer of the group. You've got Newmont Mining as a gold miner. What's funny on this too is we don't have a lot of gold miners in here. We don't have Barrick Gold. We don't have Agnico Eagle. We don't have others in here too, but we do have Newmont, which is going to be our representation of some of the gold miners in the group. But chemicals, construction materials. So performers over the last month and as of late. Now there could be some possible setups in here. That's what we're going to look at as we go through this. I did want to take a look at Albemarle because Albemarle is really, I want to say, I think it's the world's biggest provider of lithium, and lithium is used for batteries. And so let's see, ALB, there's ALB right now. That's what you got. So it's a little bit of a sideways, sort of a rounded bottom, right? It's rounded over here. And what are we doing? It's up $6 today. Well, okay, so up $6, and it's just breaking above a range right there. So Could that have been a cup and handle? I've kind of highlighted the cup and handle. It could be. I would say at the very least, and this is how these cup and handles can be broken down, folks. That it would be like a rounded type bottom, referred to as rounded bottom. This would be sort of a flag pattern, right? This is sort of a follow through, and this, you combine everything together. You're looking at a really kind of a cup and handle, are you not? Just taking out that range right now. This is number one. I think it is in the world. Don't quote me on that, but it might be the number one lithium provider. Now, what's interesting is looking into this too. China cut back on one of their lithium mines, and I think it reduced the supply of lithium to the world global reach to, like by 20% is what I was reading. You don't quote me on that. You'd have to look into it in more detail here. But are we seeing some strength in Albemarle? Well, the chart says, yeah. Now, do we have some themes behind it? Well, we could. It is in materials. In materials, the sector itself is showing some strength. It's breaking out. Let's go ahead and just use what we've been doing in this class. And by the way, this is the trade that we put on last week too, because I will put in trades, these top-down trades using different themes. And that was our trade here on Carnival. Did it break out of our swing trade? Folks, it did. There's kind of a swing trade potential right there. So we'll keep tabs on that. The target is up there just below that 100. We'll watch that. For what I refer to in my swing trade class is a T2 target. T2. It's the target number 2. It's not the high of the range target. It's the T2 target to the upside right there. Okay. But that's just kind of steady as she goes right now. Let's get back to our ALB, Albemarle. One cool thing, I did look at Albemarle because I do like to look at just companies and see what they're doing and different things. But these guys have been recycling lithium too, which is fascinating. They take old batteries and recycle the lithium from it. I'm very curious as to what their return on invested capital is on that process. I know it's a good thing to do for the environmental perspective, and I personally like that kind of stuff because, I mean, if you can get old batteries and get the stuff out of them and just reduce the quantity of waste, I mean, that's a win-win, right? But if there's a higher ROIC behind it too, I think the company wins. And a lot of times you have to have both, otherwise it's going to hurt the group. But they take these old batteries, they get the lithium out of them, and they use them, the same lithium, for new batteries. And so they kind of try to close the loop on lithium. Like, hey, we use the lithium, which is very, very important for a lithium ion battery. They try to close that loop. Once it's used, they reuse it again and again and again. And so I'm just reading. That's kind of an interesting development with the company. This is what this company's done over, by the way, look at that. Yeah, the price of lithium has been down. Now, recently, the price of lithium has really spiked. To give you guys kind of a longer term perspective on this as we look at it, because this is what we do. Now, this is just an example trade, but we go through and in this class, and we do take that component of macro fundamentals here too, and we try to tie this in together. But I would say that is a kind of a longer term support level that the stock bounced off of last time. Now, if it were to recover here, well, if it were to cover anywhere near where it's been in the past, some traders might be happy with a move like that. Anyways, I wanted to throw that in there because, yeah, we do look at a little bit longer term as well within this class. It's kind of a fun approach. Let's go ahead and put a trade on right now. We'll just do a sample trade example for traders that are looking at this. Now, the markets are closed, so we would have to look at, how the market performs as of, tomorrow, right? But what we could do right now is I'm going to highlight, say, for example, a target on a swing type trade. And that swing trade would be something like this. There's your move to the upside. There's the low. And we take this same price range here and extend it to the upside, which would be somewhere in the neighborhood of there. That's about 100, a big round number. Sometimes you find resistance at that level. I'm going to put it just below there. We'll just put like 99, for example, as an example there. And what we can oftentimes do too for a potential exit is put the trade down here. Now we can put a stop order in. Now a stop order will not guarantee an exit at that stop price, but it does compete with existing market orders in the market to sell. So it might be near that price, right? But it doesn't necessarily guarantee an exit right at that price. It would just be an exit order going out to the market to fill. All right. So I wanted to state that to you. But oftentimes, traders with a big breakout like this, maybe they don't want to take a huge risk on the trade. And so they might just be looking at the lows of the day here. And they might say something, honestly, like this. They might say, well, that if I buy in here somewhere here, and I get knocked out, and I get knocked out right over here, let's say a potential exit comes in just below that 80 level. Well, how does this look in terms of a risk kind of potential risk, potential reward? Is that good enough or is that a little bit too wide? If that's too wide, some traders might say, well, hey, I'm telling you what, Mike, if it goes halfway below the 50% level, which there's actually some support here, I might get out of that trade. So there's kind of a decision to be made. I'll go ahead and just set it down here at about 81, and we could put our target about 99. And I realize it broke out a little bit, and that's kind of a wider sort of a potential exit level we'd be looking at. Actually, it's quite long, but let's just do that as an example. That's what we're talking about in this class. So we'll go upside, potential upside target, follow through on that flag pattern, 91, and our downside, 99. The downside was 81. 99, tab, go to an 81 right there. We've got to put good tail cancel orders, good tail cancel. And I don't want this trade to be too high. The last trade was about, it's 87, 87.68. I'll tell you what, I'll do 87.80 as a good tail cancel order as well. We got to just be mindful that those are all sitting out there. There's a look at the trade in our dialog box right there, confirmation dialog. You can see buying power effect, margin requirements, etc. for our trade. Make sure everything's good to go. I'll send that through right now. But there it is. I'll tell you what, I was looking at this material sector and Riceberg dragged me into it, which I did appreciate, by the way. No, it's interesting to kind of take a look at. Hey guys, that I know many of you do look at and kind of track what we do, what we teach in some of our classes, as it does relate to what we teach in terms of swing trading and others. I'm just going to highlight this swing trade class over here. If you like that time frame, a lot of the trades I set up in the other classes do tie into that swing trade time frame and those sorts of setups, like we just did on Albemarle. Really, a three day to oftentimes a month time frame. Could be really short, could be a longer term time frame. But if you like that kind of a time frame, if it fits kind of your trading style, you can come over here into playlists. And by the way, I'd love to have you subscribe here too. If you haven't already, you can go to this Trader Talks channel and just subscribe. Love to have you on board. We're over 160,000 subscribers right now. Here is a class over here. I guess the last one I did was yesterday. I will go ahead and just do this. Let me just copy that link. I'll post it in. We talked about recent strength using indicators for upcoming news events together. So we kind of combined some upcoming news events for some stocks and strength as well, indicators within those flag pattern timeframes through another element out there that I use. Traders will use from time to time, which is the news, upcoming news event. Anyways, if you find that helpful, I'm going to go ahead and just throw this into the chat. And we'll just do this. So this is the swing trading. There is a list in there. That was for that class, but there is a, well, hang on a sec. I'll just put the link in if you're interested for the whole thing. Oh, maybe I already erased it. Anyways, there is a playlist in there too of other topics too, but we just go through some of the rules of swing trading as well. Anyways, folks, back to what our key discussion was today, and that is looking at that sector rotation and really trying to spot, hey, what might be forming when the sector is showing us strength relative S&P sector, relative to the S&P 500 itself. Remember, it won't go higher, but we're using relative strength. Let me just highlight that point one more time. So let's maximize this, and I'll show you right where we're at. So this is the relative strength indicator that we are using, that I have in there. Now, you get that with that chart that I'd shared, right? That grid chart. But if I come into the studies in here, that's it. It's just relative to the S&P 500. We did one kind of fun one earlier too. The price ratio. So we'll be watching that. Just want to give you guys some things that you could be looking at on the horizon. We talked about that earlier, but all right, everybody. Well, hey, this has been fun. I encourage you to go ahead and go in to the scan and use these great tools that we have within the Stock Hacker where you can scan in the S&P 500. Then you can go in here and pinpoint a specific industry that you might find. What was the other one we were looking at? Well, we had financials in there too. If that's an area that you want to take a look at, see what's been performing, I think I gave you the tools to do it, and you certainly got the tools from the platform. So great to have you all here with us today. I'll look forward to future discussions, folks. Again, if you're finding this kind of type of content helpful, useful, just smash that like button. I look forward to future discussions with all of you. Thank you so much, Cam, for your help. And folks, always give us a follow on X, Cameron May. Got to say the full name. I call him Cam, but it's Cameron May CS, Mike Fairborn CS on X, formerly Twitter. Everybody have a fantastic rest of the day. We'll see you next time.